Hello, and welcome back to the weekly roundup. Today, Ben will be giving us some highlights from the elections, interest rate directions from the Feds, inflation numbers in Canada, and what we expect for next week. Hello, Ben.
Hi, how you doing today?
Great. And you?
Yeah, pretty good. Pretty good. Markets have been pretty quiet though, generally, but we're starting to get earnings from the banks this morning, so lots of things to go through. But
Nice.
yeah, and the sun's shining, so that's good too.
Oh, yeah, that's good. Okay, well, we'll start with the political landscape, notably France and the US. Any updates here?
Yeah, so France started pretty with the elections looked like it was going to move pretty far to the right-hand side to more kind of conservative, very different from the way France has been for decades. Then they had the second round of elections. They have a different election process than they do in North America. And it looked like there was a coalition on the left that's gained some power. And so we're probably going to get a much more muted France than we'd had before. More kind of a neutral stalemate type stance, which isn't really ideal for Europe because Macron and France have really been, I think, leaders in negotiating with Putin and Zelensky and the U.S. and they've been a neutral body, and this might not help them. So that was a bit of surprise. The other area before I comment on the U.S. is the UK, where they moved from a conservative leadership to a very socialist leadership. So we have friends that own businesses in the UK, and my wife was speaking with them yesterday, and they're not super happy about the changes because it seems like there's going to be a lot of tax change, a lot of things that aren't going to be super great from a tax perspective. So lots going on there. Um, and then, of course, in the US, uh, Biden continues to step in it. Um, I don't know if you caught anything from yesterday, but he introduced Kamala Harris as Vice President Trump, and then he
Yes.
introduced Zelensky as Putin. So well, I think he's probably still doing good things. He's certainly not
Yeah.
helping himself.
Uh, that's interesting. It's good to
Yeah,
see how that will play out.
yeah, for sure. I
Powell was in front of Congress this week with some interesting macroeconomic indicators. Do you want to share some of them with us?
Yeah, so I think he's kind of said, and the market hasn't reflected this yet, but I think he's kind of said that inflation's come in, unemployment's rising, really a couple of the key indicators that say whether they're comfortable or not with starting to cut rates. And so it was, I mean, the market didn't really interpret it too much, but I think it was quite a positive. And the likelihood of a cut in September's moved up somewhere around 75%. The July one right now, which in one of the daily charts, I'll show you a quick look at it. July hasn't kicked up yet, but certainly September has a bit. So yeah, the data seems to be pointing more towards some challenges in the U.S. economy and maybe a little bit of a tougher path ahead, which is probably what Powell wants anyways to
Okay,
so
you
we
froze up there for a
we've
bit.
okay.
Okay, you're back. Yeah.
Yes, yeah,
Okay, let's bring it home a bit. Canada inflation numbers,
yeah.
they appear better. What is the implication of this on the rate decisions?
Yeah, so it does still look like a coin toss whether they cut in Canada or not. Next week, I believe 16th, 17th, something like that. So I think our economist team's of the mind where maybe they just cut and then put it on pause for a month and see how the market reacts to it. As you know, rate cuts and rate increases. Like economies, they're big giant ships. They don't just switch on a dime. So, sometimes they go ahead and make these decisions to cut rates or increase rates and expect to have an immediate reaction, even though economic data is lagging. So, maybe they cut. Our inflation numbers continue to fall, our GDP numbers continue to fall as well. So, there's plenty for them to say as to why they would cut. So we'll see what happens. I think it's inevitable. Sooner the better, but we'll see. Right now, it's a coin toss.
Okay.
Yeah.
Anything else got your eye this week?
So I'd say earnings starting. So we had the banks with their earnings today. So JP Morgan, Wells Fargo were two of the big ones in the US that reported. Both of them beat. You'd think that was good, but they sold off with that news. I think their forward guidance is a bit softer. So that's always interesting to see what the financials say, what's going on. And they kick off the earnings seasons in the U.S., where the Canadian banks are the last ones to report in the Canadian earnings. So this will be important to watch. Tesla, which we've been following, they're rolling out their taxi autopilots. They were supposed to do a launch in August, but they pushed that back to October. Market didn't really like that yesterday. It was down about 7 or 8% on that news. So we'll see if anything more plays out from that. But Tesla is, I think, always an interesting one to follow, and those are a few of the things that jumped out at me.
Okay. Let's go to the charts.
All right. Okay. Let me just let me know if you can see it.
Yes, I can.
Okay, perfect. All right. Okay. All right. So this is a little bit, certainly I've been talking about this and we've been following this. This is the website predictit.com. So this is really the betting around who's going to be the leadership of the Democratic Party. And so as I commented on the daily, I thought there was no risk to Biden not keeping that position, but you can see what has happened in the last couple of weeks since the debate. So right now, a 43% chance of Harris leading the Democratic Party before the election. So this is pretty shocking. I think it'll be interesting to see how this plays out. Obviously, a few other names in here. I don't think there's any chance of them taking the spot, but this has been really interesting to see how this plays out. So as I mentioned, yes, so we're starting, as Powell started to talk about rate, inflation slowing, unemployment rising. The market has done very little in pricing in a cut this month, effectively making it 0% likelihood of a rate cut. I think that's probably underpriced right now. We could see them do something. I don't think likely still, but because the data's been quite a bit softer than they expected, that would certainly shock the market, and that'll be important to watch over the next couple of weeks. So that'll be something that'll certainly be watching. And then just as I mentioned, kind of the quiet time, summers typically are a little bit quieter in the markets in general. But this has been a long period of time here where we haven't had a material correction. And so this is the view since 99. Only two other instances since that the S&P has gone this long without a 2% drawdown. And so what it's resulted in, obviously, is quite stable markets to the upside. But what's happened as well is volatility's gone super low. gone through the floor. And so you've had options skewing, like calls are quite a bit more expensive than puts. Typically, that's a signal that there's a significant amount more risk in the market than we've seen in some time too. And so I've talked a little bit about puts, and we've done that on and off for the last couple of decades. So it's something increasingly I'm looking at. I do think ultimately rates get cut, quantitative easing kicks in, and we see a stimulus into the markets, particularly if Trump gets in. But in the meantime, where this period of calm, and no volatility tends to increase the risk of something material happening. And so this was an interesting call out that I saw this week as well. So that was it. Kept it to my 3 charts today.
Good. Interesting to see the sentiments around Kamala.
Right.
Something
Surprising.
definitely to watch out for.
Yeah. I think
Okay.
probabilities are increasing quickly after each conversation he has.
Yeah. What's on the agenda for the week, for next week?
Yeah, so next week we'll be watching rates for sure, and as earnings start to kick in earnest, we'll be watching that. Some of the companies that I think I'd mentioned a couple of weeks ago, like Nike and Disney, and some of these consumer discretionary that had trouble in their earnings started to pick up a little bit here. Nike brought in a former senior executive to come back to work on the rebranding and the repositioning of the business. So be watching to see how that plays out. But some of those companies that we're looking at are making some changes, and so I'll be watching that. But really, it'd be rates, data, and earnings will be the focus next week.
Okay, good. We will be sending out our Q2 reports over the next 2 weeks. But in the interim, if you have any questions or if you'd like to book meetings, please reach out to me and I will be more than happy to help. Okay, this was a good
Perfect.
one.
Yes, it
Yes.
was.
Have a good weekend, everyone. See you next week.
You as well. Thanks. Take care. Bye. Bye.